Good morning, everyone. Welcome to our brand new series of property webinars. We're really excited to present this next batch of webinars to you. Starting today with a product that I'm super excited about. We've been talking about this for a while. George and I, and you'll remember George Radford, the MD of One Global Property Services, joins me again today. George and I have been talking about the triangle for some time, and we are extremely excited to bring this to you today. The triangle is in Ashford. It's a fantastic development. It ticks a whole lot of boxes in terms of an investment property and investment development, and from price, location, it's well positioned, and the rental returns are really good. And to top it all, it's just a really beautiful development, both from an aesthetic point of view and from an exceptional high quality of finishes. And so I think this development will definitely resonate with our South African, but also our African client base. So, ladies and gentlemen, I can't wait to bring this to you. I can't wait for George to take us through this development. So, without further ado, I'd like to welcome again George Radford.
Brilliant. Thank you very much, Brad, and big welcome to everyone. And thank you to you, Brad, and the Carrick team for the invitation. It's always a pleasure. So I'm just going to give a quick introduction to the One Global business, provide a bit of background there, and then we'll look at Ashford as a town itself, and then look at the development, and also give some insights into what's happening on the ground here in the UK from a property perspective. So One Global, essentially what we're here to do is to ensure that when individual clients are investing in international property from anywhere in the world, that transaction is managed, safely, effectively, and efficiently in a way that is designed to optimize the return on investment. We've got a global footprint, big presence in Asia, Middle East, Africa, and also in the United Kingdom. So we're very well placed to service clients around the world, and we've won various awards over the last 5 years as a result of that. In terms of the services that we provide then, so as with any investment, right at the front end, it's crucially important to ensure that the research and the due diligence is conducted thoroughly to ensure that the investment is safe, it's secure, and it's going to deliver on its promises. So we're very particular about sourcing product with standout developers in the market, which this one is definitely a prime example of, and making sure that we are aligning ourselves and Carrick are aligning themselves with the best developers in market to ensure that clients get access to the best products in markets where they're going to deliver the best return on the client's equity invested. So once we've secured and sourced the developments, obviously we need to understand the client's requirements and give investment advice based on those requirements to align it with the most suitable product. And then we will facilitate the conveyancing, the appointing of solicitors to manage the legal side of the transaction, the mortgage side, the lettings and the management, and also the resales. So not only are we focused on securing, the best product in market, we're also very focused on ensuring that once that property completes, that the asset is managed correctly, and it delivers on the investment fundamentals that clients invest into. Just sort of reiterating some of the partners we work with. So this is really key in terms of our development partners. So there's some big names on here. Barratt London, part of Barratt Homes, the biggest developer by volume in the UK and the most award-winning developer. Galliard Homes, biggest privately owned developer in London and the South East, and a whole host of other very significant developers and some smaller sort of medium enterprise developers in there as well. So, right, Ashford. Where is Ashford? Ashford's in Kent, the Garden of England, as it's well known. You can see, I'm sorry, the map's not so clear, but Ashford is just located to the southeast of London. Right, just some sort of key stats on Ashford as a town. So there's booming population. Over the last 15 years, we've seen population growth of 22.5%. The average house price growth in Ashford over the last 5 years is 29%, and we'll see a bit later in the presentation how that has compared to other markets. The house prices in Ashford, which is really key, are almost 40% less than they are in London, so much better value than clients will get in London property. The connectivity is fantastic, and again we'll focus on that in a bit. 29 minutes into London by rail. There's a huge job creation taking place within Ashford because the industries are absolutely booming. 10,000 new jobs have been created in the last 5 years, and proportional to the overall population, that is very, very significant. And of course, people need places to rent and to buy, which is great for the property investment story. And there's a new film studio that's being developed, which again is creating a lot of employment and a lot of excitement for the town. And I will elaborate on that a bit later on in the presentation. Okay, this is for me probably the standout slide in this presentation as to why Ashford is so unique as a location. So Ashford is the only town in the whole of the United Kingdom outside of London, which is obviously a city, that has access to the Eurostar to travel into Europe. And that is absolutely amazing, really, having the ability on your doorstep to go down to Ashford International Station and one way go into London and the other way get to Brussels, Paris, Amsterdam. So you can see on there, hour and 32 minutes, direct train, 10-minute walk from the property, direct train to Brussels. You can be in Paris having croissants in an hour and 52 minutes. So yeah, that for me is really the standout, unique selling point for Ashford as a town, which is obviously very significant. From an employment perspective, the cost of employing staff in Ashford, like it is in a lot of the regional UK cities, is significantly less than London. So the whole point of showing this slide is that with quite a lot of externalisation of people relocating from outside of city centres, wanting to be in a commuter distance, maybe 1 hour from London. This is really significant because it means that employers can now set up offices in more regional locations, employ staff more locally, and really reduce their, some of their significant operating costs. So I think we'll see a lot more of this moving forward in terms of relocation of staff, and we've already seen it obviously in big key cities like Birmingham and Manchester. But I think that's quite a compelling stat that can't be overlooked in terms of the cost of labour and the attraction for employers setting up camp in Ashford. Ashford also has the most outstanding college within Kent. It's the only college in Kent that's been classified as outstanding by Ofsted, and capacity for 1,000 students there. So again, quite a big draw card for people relocating to somewhere like Ashford, or even for people who are currently located there, having those educational facilities on their doorstep. And again, really crucial for businesses located there. The Ashford Designer Outlet, which is within a 15-minute walk from the property, it's massive, and I'll elaborate on that in a second. But this is a big draw card. In the UK, you've got two major retail outlet centres like this in the south. One is Bicester City, and the other one is Ashford. So over 3 million visitors a year. So it's quite significant, the amount of people that this draws into the Ashford area. And then Elwick Place, which is the main shopping centre. This is literally 4-minute walk from the property, which we'll have a look at in a second, across the bridge, and you're bang in the city centre, town centre, sorry. You've got a big leisure complex here, sports centre, gymnasium, cinema, Eurostar, and then the major retail shopping centre is just next door as well, and the high street. Just coming back to the designer outlet, I mean, it's not really a place that I would be drawn to myself. I wouldn't travel a few hours to go there, but a lot of people do. And, you know, attracting 3 million visitors a year is quite significant, and the impact that has on the town is brilliant. And it's not just going there to buy designer clothes, there's a whole host of restaurants there, so it really is a facility for the local community to go and you know, dine out and, you know, enjoy the facilities that it has on offer whilst doing a bit of shopping, of course. From a leisure and cultural perspective, Ashford is you know, it's a really exciting place to be now. They've got the most award-winning local brewery there, UK Brewery of the Year, the Curious Brewery, which is a short walk from the property. I drove past it a couple of weeks ago when I was visiting the development site, and you've got the Arts Academy there as well. So there's a lot going on, and it makes it a more exciting place for young professionals, which typically speaking is our target client profile within the properties that we're going to look at in a second. This is a huge accolade for the town of Ashford, the International Studios. So planning permission has now been granted, £250 million film studio, which Netflix and Amazon have signed up for. So again, just a great testament to Ashford, and a lot of this really is driven by a few factors, largely the connectivity in the town, and obviously the cost of locating these premises there. So let's have a look at the property market. What I've tried to do there is to build a picture as to where Ashford is and what is going on in Ashford, and what facilities are on the doorstep, and hopefully I've built a slightly clearer picture on that. But let's have a look now at the actual property market, because that's obviously very relevant and what we're all here to find out about. So I think the chart I'd like to draw you to is the one on the right hand side here. So this shows how Ashford has performed over the last 5 years. And you can see that Ashford, over the last 5 years, property growth 29%. Compared to London, it's significantly outperformed London. It's outperformed the southeast of England as a whole, and it's slightly outperformed Kent as a whole. So really is a key growth node in terms of regional southeast of England towns. So that's why we've been really attracted to it as a location. The next slide, which has quite a lot of information on, so please do read it when we circulate the presentation. The one I want to focus on is really this one here that's outlined the southeast, and it shows, so we've looked at the growth previously, 29% growth in Ashford over the last 5 years. Moving forward over the next 4 to 5 years, we're looking to see growth of around 17%. I actually expect that to be a lot higher given what's currently going on in the United Kingdom. For those who are not so in tune with the domestic market here in the UK, it's absolutely booming. I've never seen a more buoyant market in the last 15 years. And you know, to give you an idea, property prices over the last 12 months are up as a whole across the UK by more than 11%. So despite the pandemic and COVID challenges that were presented, you know, the UK property market has remained remarkably resilient and continues to gain momentum in that growth. So I actually expect to see more than 17% over the next 4 to 5 years in Ashford, but conservatively, that's still not a bad starting point, is it? Right, something that really I find fascinating, and I think this slide is brilliant. It's from a recent Savills report. It shows how the consumer tastes have changed across the pandemic. So these dots here, again, apologies for maybe not being so big on your screen, but these dots are showing pre-COVID, and the bar charts are showing now, you know, how things are currently. And this is the list of priorities for home finders when they're searching for a property. So I think the first one to look at is this one. So this dot here shows how important it was for people when they were looking for a property in terms of their requirement list, how important it was to be close or have access to outdoor space from your property. And you can see that's how it was pre-COVID, and this is what it is now. So that shows us that the requirement for people to have outdoor space has now become the #1 priority when people are looking for homes. And that's obviously because of the home working culture, people not being tied to their desk in the city. So I find that absolutely fascinating. This one here, which previously was the #1 priority when people were looking for a home, was being close to transport links. So that's how it was pre-pandemic. That was the #1 priority, and that's dropped off significantly. So being close to the train station and the transport links now is not as important. I mean, the great thing about Ashford is it is so remarkably well connected from a transport perspective, but I still find that really interesting. And then this final one on the right-hand side is the importance of being close to your place of work. And you can see again, pre-pandemic, it was, the second, third most important thing that people would look at, being reasonably close to the office. And the importance of that has really diminished quite considerably. So I suppose the point I'm trying to get across here is consumer tastes have changed. We need to be in tune with that, and the products that we bring to market need to, incorporate that within the design of the development. And here with the triangle in Ashford, we definitely do achieve that. So absolutely fantastic development. We've just broken ground now, and just to show you some fundamentals, it's called the triangle. No prizes for guessing that. It's in the shape of a triangle. We've got Victoria Park, which is just to the rear here, and I'll show you a bit more detail on that in a second. You've got an incredible internal courtyard, and over 140 units are split across these 3 blocks here. The main road is at the front here, and then the town centre is just across the bridge here. So I'll show you in a more detailed map, but hopefully that sort of adds a little bit of context. So just some key fundamentals here. So who are we working with? We're working with King's Crescent Homes, a developer we know and love and trust. We worked with them on our previous landmark development in Birmingham, the Copper Works, which a number of you may be familiar with. And what is an absolutely incredible achievement from King's Crescent Homes perspective and our perspective, and obviously Carrick, is that this is in partnership with Homes England and LendInvest. Coming back earlier to what I was saying about investments being really well researched and safe and secure, these are 2 of the key funders in this project. Homes England are essentially part of the UK Ministry of Housing. So it doesn't get much more secure than that when you're looking at development funding for a project. So absolutely delighted to be working with such incredible partners, which is only a benefit to our clients and ourselves. The tenure here, it's a virtual freehold, 999-year leasehold, so it's a virtual freehold. The build period is 2 years, just under 2 years. As I mentioned, remediation work has taken place, and the groundworks are about to get underway. So the scheduled completion date is Q1 2023. We're currently launching Block B and Block D, which is 32 units and 67 units, both with a large majority of the units overlooking the park and or the internal courtyard. The starting prices, mixture of studios, 1, 2 and 3 bed units. So studios starting from 180, 2 beds from 210. 1 beds from 210, 2 beds from 250, and then there's a handful of 3 bed units in there, £325,000. Really generous design. Every single unit has outdoor space. A number of the units have double balconies or double terraces, which is really, really exciting. And again, buys into what the market is after now from a tenant and a resale perspective. The 2 beds and 3 bed units all come with parking, which again is a big plus point when you're trying to rent the property and also trying to sell it. We're looking at rental yields pushing up to sort of 6%, which again is brilliant and far better than one would get in Greater London as an example. And there's a 10-year building warranty on the development, which again is fantastic. And you can see there's some sort of indicative rental values that we expect to achieve. The final point to clarify, I suppose, is the ground rent. The King's Crescent homes are really sort of leading the line here in terms of abolishing ground rents on this development. You know, often it might be £250 or £500 a square per year per unit. On this, there's no ground rent at all. Really important because it obviously increases your yield, but it also eliminates any potential challenges with lending from mortgage providers. I'll come back onto the payment terms at the back end of the presentation, but hopefully that gives you a good overview of how this works. And the sort of key fundamentals behind the project. Again, spectacles on for this slide. The development is here at the bottom of the arrow. This is Victoria Park to the rear of the property. I was there a couple of weeks ago. It's a really beautiful park, very picturesque. There's a little coffee kiosk in there, and it's just a really nice, tranquil environment. Just across the road from the development, this is the town centre. So literally you cross over the bridge and you're in the town centre here. Elwick Place is here. That's the sort of leisure and retail complex that I showed on the earlier slide. The other kind of key points to note, this is Ashford International Station. So you walk from the property down the road here, cross over the bridge, and then here you are. You're at Ashford International train station, and you can get to Paris in an hour and 52 minutes. So great for commerce, but you know, equally as good for sort of personal and leisure and pleasure purposes. Over here is the retail outlet. So that's a sort of 14-15 minute walk from the property. So yeah, just really, really exciting in terms of what sits on the doorstep. Just to sort of revisit that in a bit more detail. So Victoria Park, as you'll see in the later slides, literally it flows off the development. It's almost part of the project. Elwick Place is less than 5 minutes. It's literally across the road. The shopping centre and the leisure centre, it's 4 minutes in my view. The train station is a 10-minute walk, and the designer outlet is 14-minute walk. So great to have those facilities on your doorstep, obviously. Journey times, London Stratford, 29 minutes. You can get to King's Cross, which you can pretty much get anywhere in London from King's Cross. So many underground stations and overground lines. London Euston, if you're travelling Birmingham, Manchester, you know, you get to London Euston, 42 minutes, catch a connecting train. You want to get to the city, you know, you can get a direct train in 55 minutes. So you can access essentially East London, West London, Central London, the city, or connecting trains to go north of London within sort of 30 minutes to 50 minutes, which is incredible. And then the road connectivity is fantastic as well in terms of the motorway network. So you've got the M20, you get to Dover in 32 minutes, sorry. Dover obviously being a massive port, accessed by ferry to France and the continent. Canterbury's beautiful cathedral city, which is on the doorstep as well, within half an hour drive. And then the two largest airports in the UK, Gatwick Airport, just over an hour's drive, and then an hour and 25 minutes to Heathrow Airport. So coming back to my original point, this is so unique as an investment location from a connectivity perspective. You can get on the Eurostar, you can go to Europe. You can get on the train the other way and you go into London. You've got the airports on your doorstep, and you've got obviously the beautiful countryside and the wonders that Kent has to offer on your doorstep too. So you can see here, this is the park. Just here, at the bottom, the river, and then this is our development here. So literally it's in the park. Go on to the next slide. It's a happy couple, just bought their first home, and then you can see that the internal courtyard here. So I love the design of this. So much outdoor space, so open, so bright and airy, and you know, literally it flows into the park, which is what tenants and buyers are looking for in this market. The internal finishings are, you know, exceptional. Having been very close to the developer and the finished product, you know, I can give testament to that. And yeah, I'm just super excited to see the finished product in a couple of years. And yeah, I've no doubt it will be, you know, absolutely outstanding. And then that gives you another view. I really love the aspect from here. So this is, again, you know, the road is behind us, the town centre is behind us, and we're looking down into the internal courtyard, which literally flows into the park, which is, you know, again, it's just a massive selling point. Sorry, just a slight delay here. And then coming back to the key facts. So as I mentioned, it's just an outstanding development with a great, very strong developer in partnership with Homes England and LendInvest, which really cannot be overlooked. And for me, the pricing here, the payment terms, the accessibility to outdoor space, which is demised to the property, but also the park on your doorstep, all of the facilities on your doorstep, the access to the train lines, the Eurostar. Yeah, it really is a very unique proposition. Just to come to the payment terms then, so let's just say we're looking at a 2-bed unit, £250,000, let's say, which will come with a private car parking space. In order to secure that unit, you would pay a £2,000 reservation fee. That ring fences the unit for you and secures it as stage 1. Solicitors would then be instructed. Within 21, maybe 28 days, you would be in a position to exchange contracts, having completed the legal paperwork. At that stage, you would then be looking to pay a 15% deposit. So on a £250,000 unit, that's going to equate to £37,500, 15%. And then a further 5% would be payable 3 months after the exchange of the contract. So let's say 4 months from today, you'd pay an additional 5%, which would be £12,500. So 4 months from now, you're essentially 40% in, plus a bit of cost. So on a £250,000 unit, you're going to be looking at a £50,000 sort of initial equity injection. You don't then do anything for another 1.5 years, 1 year and 3 quarters, and on completion in Q1 2023, then you would be looking at paying another 20%. So let's say another £50,000. So you pay 50 now, 50 on completion, £100,000 of equity, and we get a 60% mortgage in place, which would cover the balance of £150,000. Obviously, there are some costs involved with stamp duty, transfer tax, and so on and so forth. But hopefully that builds a slightly clearer picture as to how these investments work. So again, that for me is a big selling point for this project. Not only is it in tune with the market and delivering a product that both tenants and owner-occupiers want, it also is structured in a really compelling way. You know, having worked with clients in the Africa region for the last 10 years, this type of investment structure is very compelling because it's giving you exposure to the market whilst only outlaying an initial 15 or 20% deposit, not doing anything for another year or two, and then, you know, when you close on the property in a 1.5 years, 2 years time, then that's the point at which you outlay the additional funds. So it's a very cash flow efficient way of investing into UK property. So I've probably been speaking for too long now and overrun, so I will pass back to Brad. It's been a real pleasure. Happy to take any questions we may have, and as you can see, I'm extremely excited about presenting this project to you. So thank you very much for your time.
Thank you, George. We do have a couple of questions. The first one being, how do you calculate the percentage increase in property prices in Ashford over the next 5 years?
Yeah, a previous chart that I showed there, you know, around 17%. That's a Savills forecast. JLL, Jones Lang LaSalle, is pretty similar. But, you know, people have massively underestimated what would happen over the last 12 months. So, as I said, I would expect it to be more than 17% total growth on the property value. I'd expect it to be more like 20-25%. But yeah, I would say if we work off sort of a 20% figure, then that would be reasonably safe and conservative. That's only the growth on the property though, Brad, as you know. It's not taking into consideration the equity that you've invested. So if, for example, a client's only putting 50% equity in and they're taking a 50% mortgage, then you can essentially double the growth that they're getting on their equity.
Yeah, and I think it's important to note as well that JLL and Savills, have been forecasting property prices for many years, and they really are masters at understanding what property is going to do, specifically in the UK. COVID aside, COVID and any sort of pandemic or outlying act of God, etc., that comes about, these forecasts have been really accurate over the years. George, another question that's been asked. I have 400k. Do I invest in London or Manchester?
Yeah, very good question. I mean, if we go, maybe I can flick. I won't flick back because I'll probably, encounter a technical problem. But if we go back to the earlier chart, we can see that London has been very flat over the last few years, and central London has actually contracted quite considerably. That being said, the outlook for London now is extremely positive. And I do expect to see very strong growth in London. I suppose the only drawback with London is, the purchase prices are higher, the yields are less, and the purchasing costs are higher. So, your stamp duty that you're going to pay on a £400,000 unit will be, more than a £200,000 unit. And the yield, I think, is the key thing. A lot of clients now are looking for yield. And will London outperform the regional UK cities? Personally, I don't believe it will in the next 4 to 5 years. Will it over the next 10 years? Quite possibly, because London's London. If it were me personally, if I had £400,000 right now, I would split it across 2 more entry-level investments. I would look at doing so maybe a 1-bed in Ashford, and then I'd be looking at maybe doing a 1-bed in Manchester or a 1-bed in Birmingham, and that gives you a nice spread across 2 really exciting markets. A London commuter story in Ashford, which we know is like the fastest growing market in the southeast, and then it gives you access to the northern powerhouse cities, either a Birmingham or a Manchester, and as a result of that, you're spreading, you're diversifying, you're getting better rental yields in those markets, and you're overall reducing some of your purchasing costs.
That's great, George. Sorry, I have one more question. Sorry, I'm just trying to read this question at the moment. Talking about the rental opportunity, any logistics around this rental opportunity. Can you unpack the rental opportunity to offset the bond or the mortgage?
Yeah, sure. So, I mean, I would always work with a 60% mortgage and a 40% equity component. Can get more. On the mortgage side, we would assess every individual client's financial circumstances, on a one-to-one basis, and then plug that into our network of brokers and lenders, and really understand what lending options are available to them. But I would say, speaking more generically, let's work with a 60% mortgage, a 40% equity component. If we leverage that on a principal and interest mortgage, so a repayment mortgage, that would be cash flow positive from day one, which is quite unusual in the UK for a repayment mortgage. And if on an interest-only mortgage, you'd be positive by a few £100 per month, which gives you a really nice yield of maybe £3,000–4,000 positive cash flow per year, plus your capital growth. So absolutely, on either mortgage product you may wish to take, these investments would be cash flow positive on a 60% leverage basis. And on the lettings and management side, we will take care of that for clients. I'm on the ground here in the UK, and we've got incredible services on the lettings and management side, which would ensure that the property is managed in the most efficient way possible.
Yeah, thanks, George. And I think that's a really good point. Very rarely do we launch a development where you're going to be cash flow positive from day one, with the investment. So really solid solid investment case once again. Last question, George. There have been a number of delays with regard to COVID or related to COVID, building delays, construction delays. Is the estimated completion date accurate?
Yeah, very much so. I mean, there have been lots of delays across the construction industry, and there's been a lot of developments that won't come out of the ground or haven't come out of the ground, or planning applications that have been aborted, or lending that's been, retracted from the financing side. What's absolutely critical here, going back to what I was saying earlier in terms of Homes England and LendInvest, is these are, big institutions in their own right that are the majority funders for this project. So that gives us massive security. A lot of construction delays happen when development finance is not in place, and projects are pre-sold without development finance being correctly in place. That's certainly not the case here. It's in place and we've already broken ground. The vaccination rollout in the UK is world class. For any G7 economy, it's the best in terms of the vaccination rollout. The outlook for the economy is incredibly bright. We are returning to normality. The sun's coming out. Everyone's getting happier by the day. And I don't expect to see significant delays in construction moving forward. What I do expect to see is the continued increase in construction costs. We've seen that the inflation now on raw materials, timber, concrete, it's going through the roof now, which is great for investors if they're buying now, because that's naturally going to have to be passed on to the consumer over time, and that's going to increase the property values.
Yeah. Look, I mean, the truth of the matter is that the triangle is well underway. This is not strictly speaking, it is off plan, but it's a well underway development. Construction is started some time ago, so I do believe that 2023 is an accurate date. So no more questions. George, thank you for your wonderful presentation today. Again, ladies and gentlemen, I just want to take you back to a couple of important points. One, location. The location of this development is just phenomenal. Again, 36 minutes from London's King's Cross, which makes London accessible from Ashford, very much accessible. The price is well positioned. The rental returns are great. So from an investment perspective, it just makes real sense. And then, from South Africans are typically they get emotionally attached to their development, to their investments. We're not quite sure why, but nevertheless they do. And I just think that this development, from an aesthetic point of view, and the quality of the finishes in this building are just fantastic. And the fact that it's right next to a beautiful park, and it has all the shopping amenities, etc., around it, just makes it for a fantastic investment. So that brings us to the end of today's webinar. Thank you very much to everyone for joining us in South Africa and Africa. If you have any queries whatsoever, please contact me directly, and I'm sure to get you in touch with George, and we can walk you through the process. Ladies and gentlemen, thanks so much, and we'll see you again next week, same time. Thanks, George.
Thank you. All the best.